Hello and welcome to HX Superheroes, where we explore the full story of human-centered leadership when it comes to making strategic and operational decisions, no matter what your business is. In today's episode, we're really lucky to have Peter Zippelius, partner at Leonard Green Partners, a leading private equity firm with over $75 billion in assets under management, with investments in over 120 countries worldwide. Peter's going to share with us his thoughts on private equity and, most importantly, investing in turbulent times. Peter, thanks for joining us for our first inaugural HX Superheroes podcast. What do you think of this setup so far?
It's great. I'm looking forward to it.
Yeah, me too.
Glad to be the first and hopefully not the last.
So I think maybe just to start things off, why don't you tell the listeners a little bit about yourself, a bit about your background, where you grew up, and how you got to where you are today. That would be a great start.
Sure, happy to. And I have a bit of a non-traditional background with regard to Wall Street. Most people that end up on Wall Street kind of started out with some sort of family history or understanding of it. And I didn't have that. I grew up in Long Island and to a very middle-class family. My dad killed himself when I was 13, and that really obviously shook my family and caused me to have to get a job when I was young and kind of have myself, my sister, and my mom all kind of fend for ourselves. And it created what was a lot of personal history and interest in working hard and understanding what it was like to work hard. Has kind of stuck with me throughout my life. Wound up luckily having a great group of friends, including my current wife was a great friend at the time. That was just a really strong bedrock for me, and allowed me to find my way to college. Allowed me to find my way to an internship on Wall Street, and from there the rest is history. I say I'm kind of the luckiest person in the world because I never would have planned I would be a partner at a private equity firm at this point. Probably don't deserve to be based on my academic background, but I think that we are all a collection of our experiences.
Yeah.
And I think really understanding where people come from, what experiences they've had, are really important to understand how to interact with them. Yeah. So that's why I give you that background.
Oh, that's great. I mean, certainly the environment in which we're sort of raised and the experiences that we're exposed to is what really is the driving force behind some of the decisions that we make, whether it's personal or career or otherwise, and certainly applies to my own history. And it's a pleasure to get a chance to speak to you a little bit about your background. Now, we've had a few conversations over the last few months, and I've come to realize that you are quite the devoted cyclist. Do you want to talk a little bit about that? Because I understand you didn't actually ride in the Tour de France. You rode in the Tour before the Tour de France.
Yeah. The Tour is a completely democratic, spectator experience. Wherever you want to sit, that's the spot that you get to watch the pros go by. So the mountaintop finishes are all filled with people a week in advance. People from all over Europe drive, camper vans and, hang out and party for a week before the pros go through. So as a spectator, you actually have great, as an amateur, you actually have great, spectator support throughout the ride. And every year they pick like the most iconic mountaintop finish for amateurs to ride through. Yeah. So it's a cool experience. The second time I've done it. I did it in 2019. They took 2 years off due to COVID and did it again this year. And this year was, ultimately my ride, including kind of going back to the Airbnb we were staying at, was about 116 miles and 16,000 feet of elevation. Took me 9.5 hours. You get a lot of thinking done on your bike in 9.5 hours.
Yeah, I'll say. Now, as a bit of a sports enthusiast myself, one of the things that I sort of came to recognize later on in my professional life is the link and the parallels between sort of elite sport and that of sort of elite corporate life. Can you draw the same sort of parallel in terms of your experience with cycling and what you do today working with Leonard Green?
I think that sport is very much a microcosm for life and very much for business also. And there are different elements of sport that I think are applicable. The first is, hard work. There is a direct relationship between working hard and performing well. You see that in sport, you see that in business. It's no, shortcut to success. The idea of, being talented, I think, is very much overrated. Work and focus will override talent any day, in my opinion. The second thing is teamwork. When you're in sport, almost irrespective of what the sport is, there's a strong element of teamwork where people have their own positions, and to the extent that they're comfortable playing those and supporting each other, sometimes they shine, sometimes they provide the assist. That's very applicable. And the third is failure. When you're in sport, sometimes you lose, and that sucks. And in business, that happens too. And just taking lessons from the losses and making yourself and your team better as a result of it are perfect. I think about that a lot with my kids. When I was growing up, I played hockey like you did.
Yep.
I played lacrosse. I only really got into running and cycling as an adult. I didn't do it when I was a kid. But you learn a lot in particular, when you're on physical team sports. And when you're a hockey player, you get your bell rung. Getting back up and getting back at it is not necessarily easy. And so, my kids, I've definitely pushed them to try to get into team-based physical sports. Also, they're not necessarily as popular as they were when we were kids, but there's still important lessons to be learned from them.
Yeah, no, I think about sort of the experience I've had in the last couple of years since the pandemic started, and having to run and manage a large global technology company. Teamwork was absolutely at the core of the success of not only getting through that pandemic and continually sort of creating value for our customers and being there for our people, because it was a difficult time for a lot of people, but coming out of that and having that sort of that tight-knit community amongst our leadership, and knowing that there's trust and that people are going to show up and give their best every day. I think that's it speaks volumes. And
I totally agree, but the pandemic also shook some of the foundation of that. So there were times during 2020 and 2021 where people said, no one will ever work in an office again, right? No one's ever going to need to physically interact again. And being part of a team and having trust in your teammates really requires interpersonal physical interaction. You can't really develop relationships with people over Zoom. I don't believe so. I think you can maintain degrading relationships over Zoom, but I don't believe that you can build them, and I don't believe that you can maintain them in a static basis over Zoom. I think that Zoom has, or Teams or whatever platform you decide to use over long periods of time, I think there's missed social cues. Yeah. And there's just not the same level of interpersonal connection that comes from it. So, I think you're spot on right, but it must have been hard running a business when people were virtual and trying to keep it all together, particularly, when everything's so stressful. And, even go to the supermarket is hard for people because they're worried about, contracting a disease and dying from getting food. Yeah.
I mean, the story that I like to tell is I joined this company a couple of years ago, just before the pandemic started. I came in, we made a ton of changes, not only in terms of the entire management and the organizational structure. We went through a strategic review. We started merging and buying companies, and we came all of that. And 2 years later, I realized I hadn't actually met anyone in person, and we had to do all of that from a home office environment, and it was challenging. And people asked me, "Well, how were you able to do it?" And I said, "Well, it was hard work. Spent a lot of time on Zoom, but the most important thing during that period was communication."
Sure.
So I probably communicated more during the last 2 years than probably I have in the last 10, just in terms of that interpersonal communication, setting up one-on-ones.
It just needs to be really deliberate, right?
Has to be absolutely deliberate, and has to be structured, especially for bigger groups, because it's very challenging when you've got 100 people on a call, or 50 people or 20 people, and you're trying to go through ideation or brainstorming sessions. If you don't have some kind of structure behind that, it makes it really, really difficult.
Right. And in the early days of the pandemic, that type of structure, that amount of work to be deliberate about communicating with people is a little bit easier, at least I think. Please feel free to poke holes in this, because everyone was in a little bit of like a battlefield mode, right?
Yep.
There's a big crisis. Everyone's trying to come together to figure things out during the crisis. But as time goes on, people get lazy and people get kind of comfortable with their routine. And it's just harder to have to over communicate when everybody's distributed. Yeah. I think it necessitates, forcing people to come together at regular intervals to maintain those relationships in person.
And that's a big challenge, not only for our business, for any other business. I talk to a lot of different leaders, as I'm sure you do, and trying to break the ice a little bit more and getting people back together, getting people collaborating. The pendulum's definitely swung a certain way. It's starting to come back to the center. And for me, making sure, especially for our younger generation and the younger generation of talent, making sure that they have the right mentorship and development in place. It's difficult to do that in a virtual environment.
Definitely.
Employee experience is equally as important as customer experience. Certainly, that's what we are seeing, and that's what we're observing. When you're thinking about investing in companies, when it comes to the employee, any thoughts on that?
Yeah, I mean, we're in a time period right now where people don't really understand their employees. There's terms thrown around like great resignation, quiet quitting, that are just labels put on things because we don't actually understand why they're occurring. And I think it's less for new investments and more for our portfolio companies currently, candidly, Kyle, because like we have seen those trends in our portfolio companies. We've seen greater turnover in software engineers. We've seen a strong push of employees to want to work remotely. We don't really understand maybe why they want to work remotely. We've seen, in the healthcare provider universe, we've seen tremendous numbers of nurses come out of the workforce, which is putting real significant strain on the health systems in particular. And we need to understand these trends. And the only way to really understand them is to understand that people are individuals and try to reach those individuals and try to understand what their experience is and why they're making decisions that they're making. So I think that the opportunity for us, at Forsta, PG Forsta, is to really try to, be that conduit and then try to use the intelligence we gather to help make, good informed advice, help provide good informed advice to our clients to make the right decisions, because these trends are really troublesome. And for some companies, they're very, very challenging and very costly, and ultimately are contributing to some of the economic challenges that we have, because wage rate inflation, incremental turnover is a big reason why we have an inflationary problem, because companies need to raise their prices in order to compensate for these labor challenges that they're having. So, I think there is a huge opportunity for us today to help the world's economy understand the changing face of labor and the changing constraints that individuals have and the changing demands that they have from their employer.
Yeah, there's no doubt that there's a correlation between a happy and engaged employee and a happy and engaged customer, right? And we're drawing parallels on that every single day. And the more that we're able to articulate that to our customers and to our people, the better off we're all going to be.
Yep, absolutely. And it's not simple, right?
No, it's not.
Because it means that we really need to listen in a smart way. I mean, a lot of times people that do these compulsory, cursory pulse surveys or employee engagement surveys, just they interpret them as, well, people just want more money. We should just pay them more money. And that's rarely the answer. People a lot of times don't quit their job over money. It's usually relationship issues. Their boss is a jerk. They're not upwardly mobile. They're not getting challenged enough. So you really need to be thoughtful about what you probe on to make sure that you're getting the insights you actually need in order to improve, as opposed to just going through the motions.
We're in the business of gathering and analyzing data and providing those insights back. But, it's companies that take that next step to close the loop, as we like to say, and take action on those insights. Those are the ones that are going to benefit the most.
Yes, it's hard, because a lot of times what likely the results of that survey is that there's leadership challenges, right? And harder things to change need to happen in order to truly affect difference. So, but the labor challenges are such that I don't think companies really have a choice right now. I think that they just trying to hire more people and expect that turnover is going to continue at the same pace that it has in the Great Resignation is not a viable business strategy in most industries. So, really trying to listen to get to the right answers and make the right leadership decisions if they need to be made is the only viable option right now.
When I started on this journey 2.5 years ago, right at the beginning of the pandemic, the sentiment of the employee base, and then we started bringing together companies, and through mergers and acquisitions, as we know, has an impact on morale and culture. And so communication alone was not enough. And so we started doing quarterly pulses, and we started trying to get an understanding of how the employee base was feeling about what was taking place, not only at within their homes and what's happening as a result of the pandemic, but more importantly, what's happening as a result of the decisions, the leadership decisions that we're making that were impacting the direction of the business.
And you've had less turnover than most.
Yeah,
Right? I suspect that that's correlated.
But we didn't. It wasn't always like that, right? It wasn't always like that. It's been an absolute journey for us to get to where we are today, and we're not out of the woods yet. And I don't think any company is. You can't rest on your laurels alone. And I take great interest and pride in creating a working environment that people want to show up to every day, give their best, and get the opportunities for upwardly mobile sort of development opportunities. But you got to focus on that. You got to make that a priority.
Yeah, most companies over the last couple of years, I shouldn't say most, I don't have the statistics to back it up, but there are a lot of companies that stopped performance reviews over the last couple of years, stopped workforce engagement surveys over the last couple of years, because they felt like the environment wasn't indicative of a normal environment, or didn't want to overburden an already burdened workforce, right? So they did the exact opposite of what they should have done. Yeah. They should have continued performance review surveys, because they're not methods to punish people; they're methods to help people improve. Yeah. And they should have done more pulse surveys to try to get a beat on exactly what people are feeling. I mean, the idea of doing an annual workforce engagement survey it's a good idea. It's obviously better than nothing. But think about what changes in your life in a year.
A lot's changed in a year, I can tell you that, yeah.
A lot. It's like the data is incredibly stale by the time the next survey comes out. So more regular listening to your employees, again, in an intelligent way, is really a much smarter way to run a business. I mean, Leonard Green, we're a small firm, right? As I mentioned, we're one office firm in Los Angeles, and we are now really going through a deliberate process to institute a performance review program. We call it professional development program for our investment professionals. So it's a group of 44 people, so it's small, but we're working with your team to design very specific role expectations for each of our investment professionals at each level, and then using Forsta technology to conduct surveys of both internal constituents as well as external constituents, whether they be portfolio company management teams or other external constituents like investment bankers or consultants that we interact with, just to try to help our individuals collect. And this is purely for their benefit. We're not using it for pay or for promotions. We're exclusive. The only people that get this information are people at Forsta, because you're helping us facilitate it, and the individual at LGP that this information is being collected on. So it's solely for their benefit to help them improve their performance. So we try to collect a pretty comprehensive view of feedback on that individual from everybody that they interact with. And it's been great. I mean, We've done it this year on a purely opt-in basis, right? So,
and what's the uptake?
100%
really?
So far. Yeah. I mean, we're doing it on a rolling basis by class, but so far it's 100%.
We're going to have to use you guys as a case study, no doubt. That's fantastic.
I'm just not surprised that it's 100%. Yeah. I think people want honest feedback, right? People want to get better. People don't want to hide.
It's the human condition.
Yeah. So. I think the question, I've worked at a lot of big organizations before LGP, right? Before I came to Leonard Green, I worked at JP Morgan, which I think is one of the best run organizations in the world. But the performance review process was viewed as, by most of the rank and file employees, as not an opportunity, but as a threat, right? And we just thought it was important at LGP to make sure that we were not conducting it as a weapon. We were conducting it as a tool, as an opportunity for individuals just to collect information to help them improve their own performance. And I think that's why we have so far 100% participation rate, because it's all upside. It's all great.
Yeah. I mean, if you kind of start from the place that feedback actually is a gift, and you come from that perspective, then that whole experience is designed. If it's designed well, it really should be a very supportive process.
And what we've done with your team, is start from a blank sheet of paper. So we literally started with a piece of white paper, and we said, for each level on our investment team, let's write basically a job description. What expectations are for our associates, for our VPs, for our principals, for our partners, and then we got everybody on our investment team to contribute to it. And the good part about it is it's uniquely ours, right? Like this role description would not be applicable to Blackstone or to KKR, despite the fact that the jobs are ostensibly the same. Our job description is uniquely LGP because it was written by us for us. That's the good part about it. Bad part about it is it took a really long time, but it's worth the time. I think it's really worth the investment to make sure that it is right for us. And we'll see how it goes, but I'm very optimistic about the.
So presumably you participated in the process.
Not yet. We haven't made it. We're going to do partners last. We're trying to we rolled it out for our VPs just 2 months ago.
Fantastic.
We're kind of doing it. I guess 1 month ago. Excuse me. And we're going to do our principals, associates, and then partners.
What's the best?
But I will absolutely opt in.
What's the best piece of feedback you've ever gotten from one of your previous bosses?
Oh boy, there's never. There's never enough, right? I mean, you always yearn for more. But I would say that it's probably at JP Morgan. So JP Morgan has and it was probably less direct feedback and more indirect, just cultural knowledge that I picked up while I was there. JP Morgan is like an institution, the banking institution in the world, right? And they don't chase business. They do the right business for them at the right time. And the entire culture of the organization is that they need to protect their own reputation first and foremost. Reputation with customers, reputation with regulators. And that's a really important lesson to learn when you're in a trust business. At the end of the day, probably every business is a trust business, but I think in financial institutions, it's more.
Money. Yep.
Yeah, and there is there's a tendency for people with type A personalities. Like I think most people that get into high finance have type A personalities, super aggressive, very competitive people. I put myself in that category. There's a tendency for you to really get wed to one transaction or one situation because it's in front of you. If you've pursued it aggressively, you want to win, right? And that can be blinding to the big picture. And it's hard for individuals, particularly as they're coming up through their career, like let's say they're VPs or principals or maybe junior partners, to really see the big picture and to understand that the most important thing is reputation, is long-term success, not necessarily near-term success. And I learned from mentors early on in my career, but I think most significantly at JP Morgan and absolutely at Leonard Green. We have some senior investment professionals at LGP, particularly our managing partners, that just have unbelievable clarity of vision.
Yep. And
they are above the BS, right? The only thing that they care about is our firm's reputation, their reputation, and our investment return. So they help us, take out that short-term competitiveness and see the big picture. But I'd say those are the best lessons I learned in my career.
Yeah. You touched on mentorship. How invaluable that is in terms of professional development. I mean, I can speak for myself. I certainly wouldn't be where I am today if I didn't have the ability to go and consult with someone, talk to someone who's been there, done that, right? Because you can learn, you can take courses, you can read books about things, and you can learn it on the job. But sometimes when you don't know and you've got that blind spot.
Yeah, I've had two, I'd say two, potentially three, significant mentors in my career. And I think that the first one was a guy named Stanford Nishikawa, second was a guy named Andrew Bach, and third, a guy named John Baumer, who I work with right now. And in each three of those situations, Stanford, I was very young in my career, which I say potentially three, Andrew and John for sure. Stanford, I was a little bit younger. So lessons were more simple when you're just out of school and you're learning from someone. The lessons get harder when you become more senior working for someone as a mentee, because there's potential for competitiveness, right? And in both of those instances with Andrew and John, they are both people that are completely confident in their own skin, completely have pure clarity of vision. They're people that understand what their strengths are and where they need other people and are comfortable, splitting the work, splitting the credit, and were always comfortable giving me, feedback, giving me rope that I needed to develop, and I owe them a tremendous debt of gratitude.
given the current sort of desire for flexible work, how do you cement that mentor-mentee relationship in a virtual world? It's going to be a challenge, I think, personally.
Yeah, I mean, it's it's a very interesting debate about whether or not it's better to be in the office or virtual. Any job where, however, you are dealing with debate, where you need a diverse set of opinions that are shared openly and honestly to come to the right conclusion for an organization's strategic direction or to make the right investment decision, you need to be in person a lot, because the strength of diversity is only realized if people are comfortable sharing their point of views. That I think probably can be done through deliberate communication like you did during COVID, but I think it probably is some hybrid between people.
It'll
being
definitely
in person
be a
consistently.
hybrid, right? I don't think we found that balancing point, that equilibrium point, if you will. I don't think anyone's cracked the code, quite honestly. And if they have, please, and you're listening, I'm all ears. But I think we will move to a flexible hybrid working environment where we try to, we being the companies and the leaders, we try and find an equation that works for both.
Yeah.
Right? That gets that level of engagement, gets that flexibility, that gives people the tools to do what they want to do and bring their best, but at the same time, making sure that you're creating and fostering an environment where people can be their best, right? So it's this delicate balance.
Yeah, and I think it's going to be a learning process likely over the next couple of years too, because I've heard many times over the last 2 years that people have said, world is more efficient if people work remotely. It has to be a remote workforce. I think that in some cases I will acknowledge that probably has been true. However, the environment that people have been operating in and living in the last couple of years is highly unusual and is not the environment we're going to have over the next 10 years, right? It's going to be different. So we can't take the pandemic time period and apply it forward and assume that it's all going to be the same, because it's not going to be. We also can't take the pre-pandemic period and say, okay, the pandemic's over, things are just going to be like that, because they're not. The pandemic did happen, people did change, expectations did change. We need to learn. I also think that, in certain parts of the country, it's logistically just still super challenging for people with dependents to go to an office. There's schools that shut down when there's an outbreak and the kid has to stay home, or they might have elderly parents that can no longer be in a group setting, so they have to live at home, and getting people to take care of them is just very challenging. So I think employers do have to maintain a lot of flexibility for the next couple of years, but with an eye towards an understanding that interpersonal relationships build trust, and trust builds highest performing organizations.
Here. We talked a little bit about the pandemic, operating a business during a pandemic. We're now moving into a post-pandemic phase, and there's some storm clouds on the horizons. There's a lot of activity happening. We've got inflation. We've got macroeconomic pressures that are taking place. Does this change the way that you're thinking about investments today? It must.
Yeah, absolutely. It's caused us to be a lot more cautious. The environment we're dealing with right now is not doesn't have precedent in our professional lifetimes, and it really doesn't. No situation has pure precedent ever, but people try to look for precedent, and here people are really struggling to find precedent. The pandemic, hit every business and every person in surprising ways. It's just a question of degree and direction. Some people in businesses, it hit hard positively. Some people in businesses, it hit hard negatively. And then the government and individual response are similarly impacting everybody and every business. Again, it's just a question of degree and direction. And again, it's all surprising because we haven't actually dealt with this before. The amount of inflation that we're seeing as a result of, in large part government stimulus and in large part supply chain constraints. No one that's really working today has seen that. There are certain people at the end of their careers or later stages of their careers that were working in the late 70s, early 80s, but there's not a lot of people. The core of the workforce today has never seen inflation like they're seeing today. So as a result of that uncertainty and the significance of the environment that we're dealing with, we've been pretty cautious and will continue to be cautious until we see some clear path. This is also is I think about the last two recessions that I've been working through. So, after September 11th and then after the credit crisis, those were pretty extreme shock-based events, or more shock-based events than perhaps what we're seeing right now. I mean, obviously the pandemic was a shock, and there was a bit of a recession during the pandemic. But the period of time we're dealing with right now, post-pandemic potential recession, I happen to believe that we are in one. But it's more slow to evolve right now, and there's a lot of conflicting signals within it. That's also making things a bit confusing, and that's why you see a tremendous amount of volatility in the public markets.
Yep.
There's lack of conviction either way because the signals that we see are confusing. Inflation's certainly high, but unemployment's very low too, and GDP has been low. So there's debate as to whether or not we are in a recession even right now. So people can deal with good news, people can deal with bad news, but uncertainty generally people struggle with, and we just have a lot of uncertainty right now.
You touched on the recession. I spent a lot of time in the UK. That's where our headquarters is based, and certainly Europe is seeing quite a bit of activity right now. There's volatility in the markets. We talk about recession. So in your sort of experience, having been through a few to date, how do you drive growth in your companies if you're having to sort of be somewhat cautious? Like, what's your experience?
Sure. A lot of it has to do with strength management teams. We have a fairly unique approach as private equity investors. Private equity generally tends to be control investors. So investor has control of the board, can make decisions on replacing management, can therefore make significant decisions on the strategic direction of the business. And most private equity firms really avail themselves of that control. We generally do not. I think we recognize, and hopefully you feel, that we believe that management teams run companies, that board members do not. And we know that we are board members, not management team members. So we like to make sure that we have in place the right management teams to drive businesses, because you're going to know better than we will what needs to be done. You're just naturally better leaders of your businesses than we are, because everybody that works at LGP kind of looks like me. Former investment bankers, thankfully not physically, but from a background standpoint.
Well, I see what
so we don't have operating partners, we don't have senior advisors, we don't have people that will step in to run businesses. So the most important thing is just picking the right team and making sure that they have the right authorship, the right accountability measures to make sure that they're driving results. And we've seen over the last couple of years some really amazing things out of our management teams, because companies were dealing with tremendous shocks over the last couple of years, and the creativity and dynamism of teams to drive growth is really, really impressive. That's certainly the most important thing. The second most important thing is just making sure that you really upfront pick the right company in the right sectors. Sectors that do have a lot of growth opportunity. If you buy a company that has smaller market share because no one has a lot of market share, and they have the ability to really grow and gain share irrespective of the pricing environment or the overall market growth environment, is really an important thing right now to make sure that you're controlling your growth irrespective of what GDP does.
Yeah. Are there any particular sectors that you're warming up to now, even as we sort of see the recession looming on the horizon?
I spend just about all my time in healthcare, which generally tends to be a less cyclical market than the overall economy. It's not acyclical, it's not counter-cyclical, it's just less cyclical. In the credit crisis, there was a dip in cancer treatments, and it wasn't because people got less cancer in 2008, it's because less people could pay for cancer treatments in 2008. So all of healthcare is, I think, more attractive than other cyclical aspects of the economy right now, just as a result of the fact that it has less volatility. Yeah. But healthcare has been dealt pretty significant opportunities and blows from COVID too that will take some time to figure out how it's going to play through. So health system market, healthcare providers as a broad class, were shut down for several months during several periods of time during COVID, except for non-elective types of procedures, and that caused some financial challenges for those businesses. most healthcare providers today are still also dealing with pretty significant staffing challenges associated with the Great Resignation. Being a nurse is probably the hardest job in the world. In the best of times during COVID, it's even ever more difficult. So there's some real challenges in the provider market, real cost challenges when they have limited ability to control price, because a lot of it comes from the government and it's set, by regulatory means. So I'd say the provider market's a bit difficult right now. You can find pockets of opportunity, but by and large, it's a difficult place. I'd say that pharma services also today has seen a lot of volatility because there's been a lot of money thrown at COVID, right? There wasn't a single person in the world in 2020 that didn't say, oh my God, I hope they can develop a cure or vaccine for this thing fast, and let's throw everything we have at it. And as a result, we threw everything we had at it. And that created a lot of growth opportunity for companies in the pharma and pharma supply chain. It also created a lot of tightness in supply of services and products in that market that's still kind of trying to work its way out. That market won't be terribly economically cyclical. We still haven't yet seen kind of what a post-COVID pricing and capacity environment looks like. So I think there will be opportunities there, but I think it'll probably be another 12 months before we know what status quo is. The healthcare IT market will continue to be, an area where we see, a lot of opportunity, just because there's tremendous efficiencies to be had in the entire, healthcare landscape in the U.S. and internationally, and that's an area that has not seen tremendous volatility over the last couple of years. It's just, these are businesses that are either services businesses or technology providers that have long-term secular opportunities. Did not see a lot of volatility. So it's easier to underwrite what their operating environment will be over the next couple of years, and it should be incremental adoption, pricing power, things like that.
Well, most of us have been a patient at one point or another in the healthcare environment. What do you think is going to be the next most exciting innovation that we can expect over the next 10 years? What's the big change coming in healthcare?
I think it'll be very much. I think likely from the pharma market. So our understanding of human biology has advanced very significantly over the last 20 years, and that has created opportunities for gene and cell therapies to be developed that are much more efficacious. They happen to be very expensive, but they are much more efficacious, in some cases curative. So if you look at overall healthcare spending in the United States, roughly 12% of it is pharma spend. And I think that pharma spend will grow, but overall healthcare spending may even decrease as a result of the more highly efficacious nature of the new pharmaceutical products that are being developed today. So I think that's the most exciting area of healthcare, in my opinion. The second most exciting area of healthcare is in just the shift to what we call value-based purchasing in the U.S. So the way that the vast majority of healthcare works today is almost like the way that your auto mechanic works. If you have a squeak in your engine, you take your car to the auto mechanic that runs a bunch of diagnostics on it, tells you everything you have wrong and what it'll cost to fix those squeaks, right? So there's a huge incentive for your auto mechanic to find a bunch of things wrong. And the auto mechanic doesn't have any incentive to help you, change your oil on a regular basis or to make sure that you rotate your tires on a regular basis. That's the current fee-for-service environment. A value-based purchasing environment would be instead you pay your auto mechanic $100 a month, and your auto mechanic then calls you on a regular basis, says, hey, Kyle, I haven't seen you in a while. Your tires need rotating, or I saw you speeding last week. Right. You should probably slow down. Right. So that we are moving there. It'll be a really long time because it takes cultural change really to drive that, and cultural change generally takes a long time to occur. So that's the second most exciting area. Both of these are really long-term, dramatically revolutionary trends in the healthcare industry, and as a result, they're difficult to play as an investor because they have there's uncertain pace of change and uncertain return. But I think that over the long run, they are the biggest opportunities.
We touched on quite a bit on, leading companies, managing businesses through a pandemic or these big shock events. What's the biggest lesson that you've learned running a private equity fund through a crisis like a global pandemic?
From an investment standpoint, I think it's vital to be able to develop trusting relationships with people in person, to be able to judge whether or not it's the right right investment to make. From an investment management standpoint, I also think it's vital. I think of my role as a board member of the companies that I'm associated with to be the guy that you want to call when stuff goes wrong. Right? Being a CEO, you and I have talked about this in the past. I think that being a CEO is the loneliest job in the world.
Can be.
Right? If things go wrong, you can't tell your team that things are going wrong because they look to you for guidance, and they look to you for confidence. Yep. You can bring it home, but you don't really want to do that to your significant other.
That doesn't work. That doesn't work very well.
So who can you go to? People have some advisors, some friends, but ideally it would be your board members. That know your business, understand your challenges, and can be a trustworthy person to share your challenges, help you solve them, or just be there to listen. So that's what I strive to be. Sometimes it's hard for me because I hear bad news all day. but to be able to develop those relationships, you really need to be in person. You really need to be consistent, clear. Be the same person every time. Have the same reaction to everything. And it's just hard to do virtually, and hard to do when you don't know people well enough. Yeah. And I think from a team standpoint, I think that we did see our culture, Leonard Green culture, fray a little bit. We go to market really as like family office. We're a very small group of people, despite the fact that we are a globally relevant large cap private equity firm. We're a really small, nice group of people. We only have one office in Los Angeles, and we know each other's families. We care about each other. And that did fray, and that was sad. So we've been tried to be very intentional about making sure that we rebuild those relationships as well as build new ones, because our whole organization has changed and grown a lot.
You've worked with a lot of management teams. You've had a lot of success in making these investments. What piece of advice would you give someone like me, another CEO, a management team, in terms of as we think about sort of these turbulent times ahead of us? Anything that comes to mind?
Environment is always changing. Competitive landscape is always changing. As a CEO, you want to have all the answers, but understanding that you might not is probably, can be in some cases, the best thing for your business, to make sure that you're constantly learning. The other thing that I think is super important and very underrated is, being approachable, being a good leader, in my opinion, means that you're an honest person, you're very authentic, you have clear, consistent communication to everybody at all times. That's sometimes hard, right? But it's super important to make sure that you are developing relationships with the people that work with you, that make them want to go the extra mile for you, right? If you are homo economicus, like a leader that looks like you should be in a magazine, but you're not actually a real person. Yeah. People are much less likely to work hard for you, much less likely to be loyal to you. Yeah. If people know Kyle Ferguson and love Kyle Ferguson because they know the real you and they want to work for you, the company's going to do way better. Yeah, I couldn't agree with you more. I mean, and we saw that during COVID, right? People really stepped up. I was amazed at how many families were homeschooling 2, 3, 4 kids, working 2 jobs, having to do all of this, not being able to leave their homes, getting on calls early in the morning, getting on calls late at night for their customers. The amount of commitment, you wouldn't have that if you didn't have strong leaders, if you didn't have strong leadership. So I couldn't agree with you more. Look, it's been an absolute pleasure getting a chance to speak with you. I've got a couple of questions here, and because it wouldn't be an HX Superheroes podcast if we didn't talk about customer experience a little bit. And so one of the questions— Who's a superhero, though? Is it you or is it me?
Could be either. Who knows? Time will tell.
We should maybe after this we should do a survey.
I think so.
People that listen to the podcast.
Well, we've got the technology to do that, right?
So I think what that'll lead to is you will choose pretty boring guests. So you will always be voted the superhero.
So one of the questions that we're going to pose to all of our guests is, what is the best customer experience that you've ever had? And most importantly, why?
It's probably easier to remember bad customer experiences because I think those stick in people's minds. But probably the best customer experience I had, going back to your cycling question, was a cycling customer experience. So I had this set of wheels, carbon fiber wheels made by a company called Envy in Utah, and they delaminated. So what it basically means is the layers of carbon fiber that construct the wheel started to separate. And they started to separate primarily because of the heat in Los Angeles. And I was riding down some fast roads, braking hard. It was super hot outside, and they failed. And thankfully, I noticed it before it became a catastrophic failure. But Envy has a lifetime warranty on their wheels, and despite the fact that I was probably a bit at fault riding my brakes too hard and too high of heat, they basically no questions asked, took the wheels back, sent me a brand new set of wheels, and I will be a customer for life of Envy. And there's a fun fact is that there's is more than two, but I think in my mind there's two very popular carbon fiber wheel manufacturers in the world. One is Envy, the other is Zipp, Z-I-P-P, which is almost my last name, right? So on paper, I should be riding Zipp wheels, but as a result of this customer experience, I will be an Envy customer for life. And I just think, irrespective of what their policy was, it was just their policy was super clear. Dealing with them was super clear and very easy. So they were honest, they were clear, consistent in their follow through. So I have a great degree of respect for them and how they dealt with that situation.
That's great. I mean, sometimes it's actually not that difficult. It's just getting it right.
Yeah, I got a person on the phone when I called. That person quickly understood what the issue was, quickly was able to resolve it. I mean, it was a extraordinarily seamless transaction, despite the fact that at the end of the day, what I was asking for was like $3,500 worth of free stuff, and they followed through. So it was great.
Great. And last, but certainly not least, if you weren't doing what you're doing today, and that's as an investor for Leonard Green, what would be your alternative career? Would it be pursuing a cycling degree in cycling in the Tour de France?
I don't know that I could do that. Those guys are superhuman. They would be.
They are
superhuman.
superheroes. Yeah.
I don't really know. I'm not the type of person to reflect back and wish I did anything different than what I'm doing today. I'm pretty, as I said at the outset, we're a collection of our experiences. So I'm comfortable with the experiences I've had before, and I never second guess the decisions I made or the things that I do. But I do think at some point, I think it would be nice to be a teacher. I think that, or even a sports coach. To your comment earlier.
Yeah.
I think that we're a teacher and a sports coach. I think that and both my parents, when I was very young, were teachers.
Yeah, same with my mother was a teacher too.
You just have an incredible ability to really, support kids, and particularly, in junior high school and high school, where there's a lot of really important, life lessons that are learned and important steps that are created. And I think, being part of helping shape the next generation would be very personally rewarding.
Great. Fantastic. Pete, again, it's been an absolute pleasure having you on our first podcast. You're absolutely more than welcome.
Will it be the last?
Well, we're more than welcome to have you back in a future date. But thank you again. It's been great.
Thanks for having me.
Thank you.